Okay, so let's go right to our point. Projections 2018. Like I said, I'm going to use the following examples. First definition that we are going to go through is the market areas. Then we're going to see the high and low prices. And then really quick, the pivot points, how to basically understand the pivot points, how it can help you to understand the pressure of the area. All right, so like I said, trend, we don't talk about trend itself, because to talk about trend, first you need to know that there's like three type of market trends, like three different type of market trends. All right, we have the short-term trend, we have the primary trend, and we have the basically the medium-term trend. Okay, so trend is a term that we don't use. We use because we trade with price action. Okay, and the price action has relation with market areas. Market area. All right. At this point, I was saying that if you're trading with indicators and trying to be a scalper or trying to be a swing trader, you know, or trying to trade on intraday basis, if you are here on this group of traders, so two things. You cannot use the stop loss. It's not for you. The stop loss will be activated every time you're going to try to make a transaction. I'm sure you know that. And also, indicators will not indicate you anything. And trust me, my first year, I lost a lot of money trading with indicators. Once I learned price action, that was it for me. I was never go back to indicators, not even stop losses. All right, blew out many accounts my first year of trading. I'm talking about 10-year trading career. Okay, so like I said, if you're in this group right here, then you can use stop loss. You can trade the market using indicators. Okay, you want to do price action, and price action has its challenges too. So for the first definition, of course, you can ask me any question here. Yeah, the RSA will not tell you anything. RSA, when the information of the RSA indicator tells you something, you already are out of the market. No indicator follows the price as fast as the price itself for you to enter and get out of a transaction. No indicators has enough speed to follow the price so closely that you can read and understand when a price is to buy, when a price is to sell, and when you have to be out of the transaction. Okay, so nothing at all. The only thing that can follow the price kind of fast is the pivot point. Okay, but not even the pivot point. It will set up a strategy for you. Like I said, I know all of them. I know the MACDs, I know the RSA, I know all the moving averages, I know the Bollinger Bands. I trade with all of them. And like I said, my first year, it was all losses because, that's the first thing we learn. And then we think that we are doing things wrong. And we're not doing things wrong. It's just we're approaching the market in the wrong strategy, with the wrong strategy. All right. After, got pretty good mentors teaching me price action, New York, and that was it. That's the beginning of my really trading career. My charts start being absolutely clean. The only thing I have on my charts, it's the, if you can see here, is just these lines. I use the MT4. These lines are just prices. These are buy prices down below here, all of this, and these are the targets, but just lines that I put, that I place in the chart. And then the pivot point, that's it. At the beginning, and I'm sure that you can relate to this, you may have the RSA down below here, you may have, 2 crosses of moving averages, just in case you may have the Bollinger Bands, and just to make sure you may have, maybe the Hikimochu or any other Japanese indicator. Anyway, But like I said, I've been in your place before, so I know what I'm talking about. And yeah, so let's go ahead and the first step to understand price action is, of course, understanding the market areas. So we're going to go ahead really quick and go for market areas first. And then we'll go to the high and the low prices of the market. Fibonacci supports, resistance, yeah, everything, all of those, all of that terms and tools, Fibonacci, it goes to analyzing the charts, the chart basically. So you're trying to understand the chart, like this is what indicators do. Like the indicators trying to tell you what is, what's going to happen here with the price, trying to understand here. And it's actually the opposite. You must read and understand what's going on here on this column of the prices in order to understand then this. So we were doing everything wrong from the beginning. We all wrong from the beginning. Like I said, this has nothing to do with this. This is like the first thing that you need to understand: when the market is buying, when the market is selling. That's it. And this is going to shape afterwards the chart. But it's not the opposite. It's not that the chart shapes or makes or gives an order to the price. It's the opposite. This information shapes this. All right? And we know that the prices on every market on intraday basis and CFDs, it moves very quickly, moves very fast. So no indicators, like I said, follows the price of the currency market so fast that you can predict or you can understand what's going to happen with the price. Nothing at all. All right? Now, the good thing is that it's very easy. It's very easy to understand when the market's buying and when the market is selling, and also to set up the strategy with that. Okay? So I'm going to show you that really quick. And of course, we cannot understand price action in 1 hour, but I'll do my best for you to have at least the basic idea. And then the rest of the information, I'm sure that our channel on YouTube will help you. All right, so let's get started with currency pairs. All right, well, lately I've been trading euro dollar, GBP, the pound, GBP USD. These two are more stable lately, and I'm kind of getting, trying not to get into dollar yen, dollar CAD lately because of the trade war that is going on with China and US. So, I'm trying to see when that gets a little bit more calm. But of course, with Donald Trump administration, the dollar will be crazy no matter what. So if you need to decide if you're starting or thinking to invest in the market, go ahead and try to follow euro, pound, the ones that are not kind of with administration too crazy. Like we know what's going on here in the Europe area. Now that the Brexit is almost settled, all of that. And get kind of away from the dollar, okay? Also gold. Gold, it's okay to trade it any time, but it's a very different entity than all the currencies. Okay, gold, it's gold, and it's not measured with anything else. So if you trade gold, like I said, it has no measure with anything else. It's very sensitive with risk aversion, with the international scenario, with many things. It's recommended only for investment accounts above, 5K, 3K. Okay, if your investment is lower than this, then just focus on the currency pairs with very low spread. You don't want to go with exotic pairs or any other currency cross pair that it will take you a lot of your margin. Okay, if you trade, I don't know, $1,000, $2,000, you focus on here: euro, pound, dollar, yen, dollar, CAD, just when they're stable. All right. So less than 1K, don't even try to enter the market. I mean, it's a very aggressive market, and you need first to make mistakes in order to yes, in order to be like to learn and to be consistent over time, you need to make mistakes. Like I said, nobody starts the market like making it, being a winner. Like the thing is, some of us get stuck in the way and they don't move forward. And some of you can make this as a final career, as your profession. So that it's the critical moment when you decide this is your final profession, that this is what you want to do, or because you lost your first account. And like I said, if you have $500 or $200, I mean, most likely you're going to lose it all within the first few days. It's a very aggressive market, and you need to do mistakes before you have consistency with your income, consistency with your trading and discipline. Okay. But like I said, don't give up. I mean, even if this is your first, second, third account of investing that you're doing, like you have to keep pushing yourself. That's the way you are going to make it. Okay, don't get like halfway. All right, if this is what you're gonna do, trust me, there's a long way to go before you make your final decision. This is your profession and your career. Okay. So let's talk about euro dollar and pound dollar. Both of them are in buy pressure areas. All right. So here the strategy and the projection for this year, it will be only for buyers. Okay, buy here and buy here. Of course, doesn't mean that you buy every time. Means that the market is going to push the prices to high levels and to high prices. Okay. So, and also means that if you see a drop in a market correction, that you better off wait for a buy price, right? And also means that if you sell euro dollar and pound of dollar, and if you cannot get out of that sell transaction on intraday basis, means that you need to close it. You have to take the loss. Okay, like I said. Now, let me explain real quick how the market area works, because it seems like, of course, it's going up, but not really. So the euro dollar, as you know, it's in buy pressure area, like I said before, and the buy pressure with the euro dollar started down below 110. Since 110, we knew the euro dollar was in buy pressure area. It could go after 126 and 130. This is the entire market buy pressure area for the euro dollar. Now it's going towards 124. Okay, so like I said, the market, even though you see that some days may look like you can sell, maybe you can sell, yes, on intraday basis. But if the market closes, talking about Europe market or US market, if any of these two markets closes and the price that it closed, it's above the opening, then your sell trade has to be out. You don't need to, you cannot hold the sell transaction if you cannot close it on intraday basis. You must know, if you want to trade price action, what I mean by the closing price, the open price, and all of those terms that I'm sure in some of the videos on the YouTube channel, you may find it too. Okay, so that's the story with the euro dollar, and also means that below 110 is the sell pressure area. In fact, there is a transition of the euro dollar between 108 and 109 that it has the final decision is if the euro dollar is going to either go for buy pressure or is going to stick to the sellers. And the sell pressure area goes from below 108 down to 104. This is the sell pressure area. So if today, for example, we were trading here, the thinking is supposed to be absolutely the opposite. If you see the market goes up, we don't buy, we wait and sell. And if you're going to buy on an intraday basis, then that buy transaction has to be out of the market on intraday basis. You know what I'm talking about? The thinking is absolutely different once you trade in sell pressure area or in buy pressure area. Okay, is that clear so far? Is that enough clear? Of course, I'm kind of. Yeah, like I said, it takes time to digest all of this because I'm sure that you're coming from indicators or maybe, I don't know, an expert advisor or any other strategy. And to simulate this, at first it may look kind of, weird, but then makes has a lot of sense. So now, once the market area is absolutely clear and defined for the year, because we started the 2008 in buy pressure area, that buy pressure area is going to stay up to December. It's not going from buy pressure area to the sell pressure area within the year. That's the beauty about this. That even though the price drops and whatever, it will never change market areas. Never. The entire year. Of course, if there is a crisis or there is a country that is going to leave the European Union, things like that can make a crisis on any currency. And that, yes, can switch market areas from buy pressure to sell pressure. Just a crisis. Otherwise, the market area, it will never change during the year. We're going to see corrections, yes. We are going to have sell opportunities, yes. But like I said, sell opportunities is also an intraday basis, and that cannot be held on one day to another. Instead, if we are buying the euro dollar and the market finish for the buyers during the day, that means it's going to go after new highs and new highs and new highs. So if you are more like a medium-term trader and you want to hold transactions, then you can hold any transaction you like if you understand the opening prices and the closing prices, because like I said, the market goes after new highs. And that is with the euro dollar and the pound dollar. I'm not going to explain now how you define those prices, but I'm sure in one of the videos on the YouTube channel I explained that. That's part of our course's map pricing, that I tell you exactly on the chart how you draw your map pricing. But this is what's going on right now, okay? This is on the euro. So the pound dollar, the GBP USD, is also in buy pressure area. Now the pound dollar ended up for the buyers too, and it's going after 142. So also the pound has the same analysis. It has a sell pressure area and it has also a buy pressure area. So here, let me show you really quick how we know this. Right. So what happened today with the euro? We were trading, we were buying, and then after the closing, we had a pretty important correction on euro dollar. But then the closing, it was right here, and this candlestick that you see, the prices were above the price of the opening. This was the opening of US, this is the opening of Europe, and the closing, it was up here. So what I told to my traders is that don't worry about this drop, because the price is still, the closing is above this closing right here of this candlestick of 15 minutes. It's above the opening prices, meaning that this is just volatility of the closing, has nothing to do with the positions of the traders after the closing. So with the euro dollar, like I said, we're going after 23.70, 75, and then eventually 124. And for some traders, this may look like a sell opportunity, but when you trade with price action, this action or this type of things is just volatility of the day, has nothing to do with the final price of the closing. Okay, so that situation with the euro. If you see in 1 hour, you cannot actually, you can see the closing, but it makes more sense if you see it in 15 minutes. So here, the pivot points, as you can see, this is the closing of the market, kind of at the end of the pivot point right here. If you see here, this is the end and the closing of Europe right here. So if you see the price above this little line right here is the central pivot point, the gray line, this one. And if you see the price above it, it's because the market closes for buyers. Okay, so it means it's going to go after new highs and new highs. And today it closed also above the central pivot point. So we have a new high coming up coming up tomorrow. What is that high? Well, those prices that I just mentioned, and also 124, and the highest is 24.60 level. So that's for euro dollar. Let's go ahead for the pound. The pound is kind of the same. We were buying today, and then right after the closing, we got this, but did not affect the opening. This is the opening of US. This is the opening of Europe. Did not impact on the price of the closing. This is the closing, and as you can see, it's above the opening. So what that means, it means that the market end up with, or like holding buy transactions on the pound dollar. And we have a new high coming up, which is the 142 level. So that's the situation with the pound dollar. So no, I mean, I'm not saying that we always go for a new high. I'm saying that if the market respects the closing above the opening, it's going to reach a new high. Yes, it will. And if the closing is below the opening, then we are into a correction of the market area, correction of the buy pressure area, and means that yes, you can sell, but on intraday basis, because eventually the market is going to respect the pressure of the area. Okay, the sellers don't own the pound. The sellers they don't own the euro. Okay, so to sell is just to enjoy a correction of the market. But it's not the final. It's not the final decision, or it's not the final situation. That's major, because I've seen many traders holding transactions or sell transactions at the 140 level on the pound, holding sell transaction on the 108, 113, 114. I've seen trading accounts in very, very bad situations. And the good thing about this is that if you understand the price, you can get out of any bad transaction that is holding your account. Very easy. You know, there's also a strategy, a plan B. You can close and get out of any bad transaction you're holding. All right. The last thing you want to think is that the pound dollar is going to drop down to your price if that price that you have is in the opposite direction, or is in the, if you're selling and the market is in buy pressure area, for example. So dollar yen, it's kind of dollar yen is it's kind of mixed, we can say, but below, I mean, these levels is sell pressure area. Sell pressure area. So even though the price goes up, then we wait for a sell price, we short, and eventually gives us some buy opportunities, but the buyers are not very welcome with the dollar yen, except the days that the dollar yen finish above the opening. Then yes, you can enjoy any correction of dollar yen. Dollar yen is good for sellers and buyers, even though, like I said, at this point it's in sale pressure area. But if it is above the opening, you can absolutely buy dollar yen and hold the transaction. Same as dollar CAD. Dollar CAD is in sale pressure area below 130. And the sell pressure area with dollar CAD goes after 123. So now we're selling dollar CAD and waiting for the 126 level, the 125.90 level, 125, and it can continue to drop. Okay, so that's the situation with dollar CAD. And with gold, it's in buy pressure area as well. The buy pressure area of gold is above the 1200. There's also a very important transition between the 1200 and the 1300, because below the 1200 it can go down the we can say 1,000, and below 1,100, I mean 1,100 is going to drop absolutely into the sellers. But above the 1,200 is for the buyers, and absolutely buyers above the 1,300. And same as the dollar yen, if the market finished below the opening prices, you can sell gold, no problem, because the corrections with gold, as same as dollar yen, are very important and can last weeks. So you can be selling gold for, I don't know, 1-2 weeks, no problem, even though you are in buy pressure area. But first you have to respect the prices and understanding that if the openings are here, for example, we have the opening of Europe, opening of US, so the opening has to be above the closing. And if that happens, then you can be shorting every single time until the market is not shorting anymore. But once you are with a short transaction, but you know that gold and that gold is in buy pressure area, that sell transaction cannot be held if the closing is above the opening. Never. Because you're going to be stuck with that transaction for who knows. You know, could go after now this 1400, 1500. It can be reaching new highs every time. So what you need to be careful with gold is to sell as long as the market is for the buyers. You better off stick to buy prices. Dollar yen sellers, as long as the market gives you sell prices. Dollar CAD sellers too. The euro and the pound only buy prices. So regarding the indexes, for example, here I have the Dow, but the Dow or the S&P has a different strategy. Kind of the same. If you see the pivot point, whenever it's above the pivot point, then you hold a buy transactions. You can hold any buy transaction you like because the market is holding buy trades with the index. And if it closes below, then you can go ahead and sell, or you can be selling because the market is selling. So that's all we got for the Dow, and also all the indexes are the same thing. Of course, the Dow now is into a correction, market correction, but every index works the same. You better off wait for a correction to buy, to sell into an index on intraday basis. It will not be recommended at all. So every correction that we see here, it's okay to sell on intraday basis as long as you have control of your transaction. But whenever we have the buyers getting in the market again, then you rather go for the buyers one more time. Don't get stuck with the sell transaction on any index. I'm talking about the DAX, the Dow, the S&P, every index. So like I said, corrections are okay to trade it on intraday basis as long as you have control of the transaction and then out of it. And buyers, you can be holding buy transactions as long as the market closes above the opening and reaching new highs. So coming back to, for example, let's give a more active cross pair, which is dollar yen, because dollar CAD is not very active. We have only selling prices with dollar CAD. We will be selling every time. And dollar yen on intraday basis, we were waiting for sell prices, but not able to sell. So the market, as you can see here, it makes some good drops, but then it does not confirm the sale price. And if you see this, but the price is not confirmed to sell dollar yen, then we don't even enter the market. Okay, because to buy and you cannot get out of the buy transaction, and we know that you are in sell pressure area, is not a good idea not even for dollar yen and dollar CAD. But with the pound and the euro, we're absolutely okay with buy transactions as long as the market closes above the opening. Okay, so all the noise of the market afterwards, after the closing, is none of your business if you trade with price action. So let me show you really quick what I mean by the buy and sell prices. It's okay to use gold as an example, or you guys rather have another instrument to show? Yeah, I can use anything. Okay. It's the same. It is the same. So for example here, I'm gonna see gold, and I'm gonna see the pound. So in 1 hour we have very important market areas, right? What I mean by market area is, you can see here gold from March. Let's take all March. We have down below here a very important low price, which is the 1300, 1306 with 83. You know, and we have twice for entire March. So of course, these prices close to 1300 is for absolutely buyers, 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 and close to the 1300 buyers, buyers, and buyers also here for all for the entire March. All right. If we start from April, what can we see from April? Let's take April here. We are now on the same prices of these highs of April. So basically, when April started it made some sort of correction. Like, we don't see this anymore. We start looking at the market like this. So means that March, it's a month to correct gold from all the buyers that entered in I'm sorry, April, it's a month that corrected some of the buyers that entered in March. So now we have, with the prices of the highs levels of the beginning of March at this point. And that being said, it means that the market is trying to sell on April. So we are now into very important levels that could mean that gold is dropping now to 1330 level, and the low of April 1322 level. This is the low of April down below here. Okay, and like I said, I don't need any indicator. I just need the price and to read it, how it behaves for March, how it's behaving now for April. Okay, so I take this as the highs of March. I take this as the low of, the highs of April. This is the low of April. And now, if you see, we are below the highs of April. And whenever it touches here, this price is going to get here and maybe here. This is for you to take a consideration how the market behaves in the long run, how you make the interpretation of the price behaving in March and behaving in April. So it looks like April is correcting. Like, we have more, like a little bit more correction than buy pressure, because we don't have highs like we had in March. What I mean by highs is this. I mean by highs, like the market going after new highs and new highs. We have corrections kind of the second week of March, but never below this level. And then March, it got saturated down up here, made some correction. Then April, it's between the high and the low of March. So April, like I said, it could mean more correction for gold rather than new highs. Okay, so that's, like I said, for kind of medium-term interpretation of the price. But of course, if you want to trade and scalp the market, then your view has to be into buy prices with gold. And if one trading session, the market finished below the opening, that's the first time you can see, and you can set up a strategy to sell gold. And even to hold transactions day after day, if the market continues behaving below the opening prices, you can continue to sell gold. The corrections gold and the correction of dollar yen are very good to basically do it on day by day. Corrections on the pound and the euro, maybe not that much. Maybe we can sell on intraday basis, but to hold transactions, to basically to keep sell trades one day to another, it has a lot of risk. So that's pretty much all of in terms of market areas and how you face this year, what's going to happen with, like I said, the euro, the pound. Same thing with the pound. We are not selling the pound. For now, we're just holding buy transactions. And we have, let me get a little bit smaller the chart. From March, we have only buyers. Some sellers, but the market most of the days finished above the opening. So the sellers were okay with the pound and the euro, but eventually the buyers will start to kick in again and to take into a new high. So we expect the pound dollar 142, 42.37. That will be the highest of this year. Let me verify that. I'm going to put it in 4 hours. So we have February. No, that's not the highest of the year. It's the highest of the market buy pressure area for March. But we have action here in January and February that it was up to 42.60 and 43 level. So we have more highs to go after, but January and February does not count for buy pressure area. For us, the buy pressure area goes after 42.37. That's it in terms of March levels. Like I said, it could not respect March levels going after the highs of January and February. Yes, it could. Okay, so that's the highs that we're kind of expecting for the pound. And the euro, if I see it also in 4 hours, taking in consideration the price action of March, we have March with the highest price, the highest level. It was 24.40, 24.42. That's it. And if we take January and February, we have 125 and 125.39, 125.40. Okay, so it could also mean that it can reach those levels. Yes, it could. But we take in consideration first the highest levels of March. March, it's the month that gives us the entire information we need for the next 3 months until the next correction of the market starts showing up. That will be in June, July, high corrections on the markets. Okay. So that's all I have for you guys. And like I said, this is something that you must acquire on intraday basis in understanding the opening and the closing.